Hello, this is Michaela at Warren & Mounts Agency, and I'm popping in to do an intro for this video. We mistakenly called this episode number such and such, and that was incorrect. This is going to be episode number 11. Today we're going to be diving in a little bit deeper to why rate increases happen and some different ways of how you as a client, even us as clients, can kind of counteract or combat those rate increases. Talk a little bit more about what we offer, what we do here. Lastly, one more thing I wanted to mention before we jump into the podcast. I wanted to give a client shout out. This client left us a review, and we just wanted to send praise and thank you for leaving us such an awesome review. Her name's Trisha, and she says, "What a great group of people to work with. Always quick to respond, professional, and happy to answer any questions I had. They made the transition seamless and hassle-free. The best part, they were able to save me money on a monthly premiums while adding more benefits. It's a win-win." Thank you so much, Trisha, for leaving such an awesome review. As I'm sure many of you know, reviews are so insanely helpful to our business, so thank you for that. Thank you guys so much for listening, and if you want to learn a little bit more about rate increases, what we do here at Warren & Mounts, please keep on listening.
It's October 4th, 2022.
2022.
We've officially been open to the public for 367 days.
Congratulations, everyone.
1 year, 2 days.
1 year and 2 days.
Yep.
Flew by.
What a year. What a year.
What a year.
We
Is that
made
anything
it.
in my teeth?
Oh, you look good.
Yeah, that went by super fast.
It did.
So we wanted to come on and talk about several things. Thanks for all the customers that have trusted us in the first.
What, over
First year.
500?
Yeah.
Over 500 customers?
Between all our commercial customers, all of our personal customers.
Yeah.
Some of those customers have both commercial and personal policies. So yeah,
Yeah.
that's
so it's been
wild.
awesome. So thank you to everybody
Yep.
that has supported us and trusted us. And even if you're not with us, if you let us quote you, thank you for that.
Yep.
We'll be circling back to you, quoting you some more.
Yeah, 'cause we quoted
Pissed
a
off,
lot.
but thanks.
We quoted a lot of people last year around this time.
Yeah.
And weren't able to save them. Like, what was that list? Like 200 and some people that we quoted?
Yeah,
I mean, give or take.
Give or take.
That we just weren't competitive with. So, the support has been unbelievable.
Mind-blowing.
So,
Overwhelming.
good things happen to good people. Good karma.
yeah.
So with that being said, a couple of things that we want to talk with you guys about really is, number one, since we've been open a year, we've got lots of stuff coming up for renewal, right?
Yep.
So we've got, people's policies coming up for renewal, rates are changing. We obviously have had a crazy year with the economy, just the market, inflation
For sure.
is crazy. So we're gonna talk about rate increases a little bit. Just kind of the explanations for why those are happening.
Yeah.
And kind of give you some insight there, because that's happening across the board. So
Yep.
we'll talk about that. And we got some other stuff, right?
So along with the rate increases, being a brokerage and how we can
Yeah.
assist you, and the options that we have to help overcome those rate increases.
Yeah.
Perks,
For sure.
working with us
Absolutely.
Yeah, this will be
versus different kinds of agencies.
no, for sure. This will be a good one around, just strictly around insurance for the most part, I would say.
Yep.
So, which will be good. We haven't done this one yet. I think the first one, all four of us jumped on here. We talked about our stories and
Yeah.
kind of how we all got to where we're at, and haven't really talked a lot about insurance. We try to bring in other people and hear their stories and hear their successes and their their failures and stuff. So we're
Yeah.
gonna talk about our stuff, and hopefully it'll be educational for you guys.
Yeah.
So let's hit it right
Let's
off.
jump into it.
Why do rates increase? What's the reason?
Rates increase. So rates increase are going to be, in insurance, is a delayed effect, right? When you see lumber cost and you see vehicle prices going up, that's been happening over the past, 2 to 3 years, right? Well, what ends up happening is these insurance companies, they have rated for X amount of dollars for, a claim to be paid out on this house or this car or whatever it may be, right? Well, whenever they start having these claims and they're not rated correctly because the price has increased, well, then guess what happens? It is a delayed effect on the insurance, and then they take, the rate increases to make up for those losses over the last 2 or 3 years, right? So that's why you guys are seeing increases, is because of everything else that's going up, right? I know that's what everybody says, but again, it's just a delayed thing. Now, this is good. This is actually great, because this is going to steady out the market. It's going to balance itself out. So you're always going to see a couple years where insurance companies take increases and then they balance themselves out, as long as they do it correctly, okay? And majority of our companies, especially our, better ones, right? The A+ rated ones and stuff like that, they're doing things correctly. The State Farms of the world, they're doing things correctly. They're not buying markets. So that's what you want to see, right? Because if not, you're going to be, instead of seeing 10, 15, 20% increases, you're going to start seeing 60, 70, 80% increases if they don't do these things properly.
So we can expect, basically what you're saying, this is healthy.
100%.
This is what we're seeing. It's not fun to see the increases, from paying your bills standpoint, but it's healthy to see these increases.
Yeah, when the market's flooded with money, and and inflation has gone up. It's you got to have increases. You just have to. You have to. The insurance companies, they have to be rated properly. And this is the time for the increase.
And this is an industry-wide
100%
situation right now, because of inflation. It's not just with the carriers we offer, it's across the board.
I know you mentioned State Farm, so we can expect to see this again, like all the companies that we have, in addition to any other captive agency.
Yeah, no, this isn't just
like State Farm, American Family.
Yeah, this is. This is going to be all the way across the board. It might not all happen all at once, right? In certain companies are going to be in certain states, right? So those increases are going to be looking a little differently, right? Versus a company that's 50 states wide, then they have more policies to they have more money, because insurance is basically a large pool of. Everybody puts their money into a pool, right? And then that's how you get your insurance coverage. Okay?
Do these rate increases, as it's increasing along with the economy, is this helping keep the insurance companies financially stable?
100%. And that's what you want. You want a financially stable company, right? Like that's what you want. At the end
you
of the
want them to be able to pay out on the claims if you have a claim. So that's important. You do. Yeah. They need to be funded properly themselves. So.
No, and there's one thing that you mentioned a second ago, probably a couple minutes back. You said, companies that are buying markets. Okay, so explain what buying a market is, because a lot of people, for example, yesterday I was on the phone with a customer and they're like, hey, I found this company randomly, and when we quoted against that company, they're a new company within the last year, and their rate was extremely cheap. I'm talking half the price of anything that we're looking at, but that company was new to the market, came in and they bought it all up. So what's that mean?
So that's a great question. So really, when it comes to buying a market, what happens is sometimes you'll have insurance companies take big decreases in the area, right? They'll pick an X amount of area and they'll say, okay, we're gonna buy this market. We're gonna try to be that go-to carrier in this market, right? So what's gonna happen is you're gonna have a ton of new clients, going into this new business or to this new company, right? And it's a 50-50 shot in the dark there, right? Because it could go very well, right? Because they've just increased their revenue by a ton. But let's say you have a bunch of claims come through, then they're not rated properly, and they have all these a flood of new clients coming into their company. So all their rates have not been adjusted correctly, and then now they're paying out on all these claims and stuff like that. So again, I'm not saying that's bad, right? It just depends on the year. And sometimes when you see somebody, like if you look at State Farm is really good with this. They are never the cheapest. They're never the most expensive either. They're always very competitive, and that's what you want to look for. Insurance is great. Everybody hates paying for insurance. I hate paying for insurance, but you need stability, okay? And when companies do that, it's a what if scenario there, right? Because if it goes well, meaning there's not a lot of claims, well, guess what? Now they've got into a market and they can be that go-to carrier. At some point in time, that'll catch up with them, but overall, it's a risk, realistically.
No, and I think the reason, just to be clear, the reason why that's important to the consumer, the customer, is because you can say, okay, well, if a company buys a market and then their rates increase, I can just go somewhere else the next year. And yeah, you can. But what you need to understand is on your end, you want to stay with one company for as long as you can. So we talk about it all the time. We're going to shop rates every 2 to 3 years, okay? Unless there's just massive increases. We're going to remarket and reshop those rates every couple of years. The reason that we do that, and the reason it's important that customers understand that, is when you have an insurance score. Okay, we talk to people all the time about their insurance score, and being with a company and showing the stability and the dependability of yourself and your consistency as a consumer is important for your insurance rates. So when you're bouncing around back and forth and you're just shopping for the best price, you could be paying a few extra dollars a month to be with a very consistent company, a very good company that's not always the cheapest, just like Jake mentioned, but you're always protected. You're always with it. You're always in a good spot. And in the long run, you're saving tons of money because you're keeping your insurance score where it needs to be.
I like comparing it to like your credit score, right? If you're taking your credit and you're running your credit every month, right, or every 6 months, it's more so like every month. Let's say every time you run your credit, it puts a ding on your credit, right? And over time, those small dings will start affecting your credit, right? They're soft pulls, they're hard pulls, whatever that looks like. So same thing with your insurance score. Like these carriers, you got to think of it if yourself as if you are a carrier. Let's say you go to a client, and that client is a shopper, and they shop every single year. They're switching companies every single year, every year. Well, that's going to, over time, it's not going to affect you realistically in the first couple years, but over a 3, 4, 5, 6 year time frame, that's going to start affecting you. And what I mean by that is that these companies are going to start saying, hey, this person here, this insurance score, this is a shopper, meaning this risk is higher, because if we have a claim and we pay out $200,000 or $50,000 or whatever that number is, they're going to leave us at the end of the year no matter what. And then they just took that hit the first year without collecting any insurance premium. And that's not just for one person, right? Again, it's a large pool of numbers. That's what insurance is. So they are going to avoid not just you particular, but anybody that is like that, right? Anybody that is a shopper like that.
Yeah, I like that you said taking on the perspective of the insurance agency. I mean, that's just like, helping out a friend. Do you want to help out a friend who's constantly putting themselves in predicaments, or do you want to help a friend who can also help themselves? Right. So, and I think the insurance companies kind of look at us as the friend, who's constantly finding themselves in predicaments, or who is kind of self-sustainable, who pays their bills, who has the nice, pretty insurance score.
Go on.
I was going to say, so you mentioned being able to shop every 2 to 3 years. We're able to do that because we're a brokerage. So we have access to all of the different carriers, where you're captive. If you're with a captive company, meaning they can only offer what they have, they're not able to do that. So obviously we don't want to do that super often, because this insurance score, we want that to maintain for you guys. But where we do come in helpful is when that rate increases, we can do that for you. You don't have to go out to every different company and do it yourself.
Correct. And that's a great point, because in times like the times that we are in, and there's nothing against any captive agencies. Like, there's a ton of great captive agents out there. There's a ton of great insurance companies in general out there. Like, don't ever let anybody say that, that company's bad. There are bad companies out there, but there's a lot of good companies too. Just because they pay out more in claims, that doesn't mean that they're a better company. That usually just means there may be a bigger company, right? Just because you're bigger doesn't mean you're better. But in times like the times that we are in, having a brokerage is probably your biggest asset, because guess what? Then we know what the market looks like. Where is everybody else at? If one carrier's this and another carrier's that, but overall, out of 30 carriers, we're at this rate, right? Well, we know, that's about where the rates will be, and if they're not there yet, that's where they're going to be going.
Right.
So yeah, that's a great point. So that's great, and we can shop you guys through every carrier that we have. And again, we have higher risk, lower risk type carriers. So it's options is beneficial right now.
And we're continually trying to add more carriers to our arsenal as well.
Yeah.
One of the things, let's kind of highlight this real quick too. The term broker. A lot of people get that term. I think there's kind of a mixed feeling on what a broker is. Some people, when they hear broker, they think you're just the person that shops for me, and then once you get me set up, you're out of the picture. You just kind of took care of the middleman part for me. That's not the way that we operate. We're a brokerage, we're an independent agency, but we're still your agent. And that's really, really important for people to understand. So just because we have Nationwide at Travelers and Liberty Mutual and all these different companies, and we've got clients with all kinds of different companies, we are still the ones that are taking care of you. And we're still the ones that if you have a question, hey, backed into my garage door, call us, okay? Call us. We'll advise you on what to do. We're still the person that's taking care of you, just like if you had a State Farm agent, just like if you were farmers. And we still do all those things. And that's really important to understand there.
And that's where like insurance comes into play, where, you know, again, price is definitely important, right? I mean, everybody wants to pay low amount of money for good policies, good coverages, all that good stuff, right? Like that's what you want. But there's not any insurance agent out there that can control the rates that they're quoting people, right? They can't do it. They cannot control anything about that. So the only thing we can control is the service that we offer people, right? Of how efficient we are, how quickly we get. I take a ton of pride on getting back to people ASAP, right? That's the only thing I can control is my efficiency. So that is one thing that I think that not just us 4 owners do a very good job with, but our entire staff. I think our entire staff, you know, we lead by example with efficiency and providing that service. And if we don't know something, because there's a lot of stuff that we don't know, right? Like, but guess what? We'll figure it out, right? We'll call, we'll make the calls, and we'll get the answers for you guys, versus giving you guys some kind of bullshit answer. Realistically,
we'll spend the 2 hours on the phone so that you don't have to.
As
our time.
Absolutely.
So I think that's where, again, I mean, that's we're of course biased, right? I mean, we think we're the best of the best because of that, right? But I do believe that. Like, I do believe if you put us up against, maybe not from a knowledge or experience level, but from a caring and taking pride in what we do, 100%. I think we would go up against anybody around here.
Another thing that I really applaud everybody, all 4 of us, Caleb, Janie, and here too, is educating our clients. That was one thing that you just kind of said. Sometimes it makes sense to file a claim, and sometimes it doesn't. We just ran into a situation where there were 2 different claims. Like, one should have been listed, the other should not have been listed. And it's kind of unfortunate for them because that is affecting their rates. And I really applaud our office for educating our clients on their coverages, when to use their coverages, when not to use their coverages. Sometimes it makes sense, sometimes it doesn't. So
100%. And that's again, that goes into us, right? I mean, it's easy if somebody calls, I need to file a claim. Okay, great, we'll transfer you over, get the claim filed. But to take an extra, 2 or 3 steps to say, okay, hey, tell me what's happened. Let's hear this out. Now let's talk about this. Okay, so you have a $2,000, it's about $2,000 worth of damages. You got a $1,000 deductible. Okay, the insurance company's going to pay out $1,000, right? Jake, is that going to make my rate go up? Well, it will. Not a ton, right? Maybe $5-10 a month, whatever it is. But that's over 3 years, right? And then let's say you have another claim where it is a claim that you have to file a claim, right? Like there's a $50,000 worth of damages, and then there's no question. Then you have 2 claims within a short amount of time, when realistically you maybe could have. It's a what if game at the end of the day, and everybody's number is going to be different. Right, $500 to one person might be claim worthy to that person, right? And it might not be claim worthy to somebody who has a $5,000 payout, damage, right? It just every number is going to be different for every person, but it's having the conversation and trying to do the best we can to basically say what are the what if scenarios in every single scenario.
Right.
So.
That's a big one with like the glass claims too. That's a really it's an important piece because it's not very much money to file a glass claim, especially if we put it on there.
What's a glass claim?
So on every auto policy, you're going to have your regular, comprehensive and collision deductibles. So most of the companies that we have, you can put on there for $100 glass repair or $250. And so it's very tempting for the customer. They're driving behind a dump truck and rock hits their windshield, and they say, "Hey, I need a new windshield," and it's going to cost them $500 to get it fixed. Well, they'll pay the $100 or the $250.
Yep.
And before you know it, that's a comp claim that you know. Just like Jake said, that one claim is not going to hurt you, but now all of a sudden, when you actually do hit a deer, and you got $7,000 worth of damage, and
or you get another rock 6 months later,
Yep.
because unfortunately that's uncontrollable too.
Yep.
And the comp claims aren't as big of a deal, right? Because a comp claim is out of your control. Hitting a deer is a comp claim that's out of your control, right? You can't control that a deer ran out in front of you, right? So those will start to add up. So just because you have people always say, oh, well, it's a comp claim, it's not going to hurt me. You're right, it's not going to, but when you start adding those up, it starts decreasing your insurance score, which that's what hurts you, okay? It's not like it's a surcharge on your policy as like a collision claim, right? Like let's say you're driving and you let's say I run into Dusty, that's my fault. That is going to be a collision claim and I want the damages fixed on my vehicle. I'm going to file a collision claim, right? I'm going to file a collision, or I'm going to file a claim on my collision policy coverage.
So in your experience, what is how heavy does the collision claims, how heavy do those weigh on the rates? And then how heavy do the comp claims weigh on the rates?
I mean, I don't know like an actual percentage or anything, but I mean, a collision is going to be an at-fault accident. Okay, collision
which is heavier.
Which is way heavier. A comprehensive is just going to be a claim, but again, it's like I compare it like this. When you have a collision claim on your policy, that's like you not paying. You just say you have a car payment and you just quit paying on it, right?
Yeah.
And you just defaulted on your loan. Okay, that's going to be comparable to a collision claim, for a lack of an example here. A comprehensive claim is like you running your credit. Right, it's going to put a ding on your credit, right? But it's not going to be that much. That's the easiest way to look at it.
Okay.
But the more comp claims you do, they just continually
just
add
more
up.
claims in general. It doesn't matter if it's a glass claim, which is a comp claim. It doesn't matter the claim, and that's where again, just having the conversation. We always tell people like, don't ever be afraid to use your insurance, right? But don't abuse it.
Correct.
Use it wisely.
Yeah.
Informed decisions.
It's funny.
And call us.
You guys remember how like in school you get the people that are like on pace for perfect attendance, and like they get to their senior year and they've still never missed a day, and so like no matter what, they're sick, they're still coming like because they're trying to get that award at the assembly for insurance. It's funny because we see customers that are kind of like that. You've got people that have never, if you've never used a claim in 20 years, I'm sure there was probably some opportunities to file a claim.
Yeah.
But they probably had the mindset of, I don't want to do it if I don't have to. And then
Correct.
Those people have the best rates that you will ever see.
Yes.
Correct.
Absolutely.
100%, absolutely.
Like
but then you'll see the other side of it, where we'll run quotes for somebody, and then there's 4,
Sorry, you're ineligible because you have made too many claims.
Yeah, everything is a delayed effect. Like everything, rates increases, and exactly what you're saying. The people that are bragging that, I've never had a claim in 20 years, and they hate paying for insurance. And hey, I agree. I hate paying for insurance too. But that's why you have 7 cars and you're paying $150 a month. For all 7 cars, or $200 a month, when other people are paying $200 a month per car, and so it all adds up down the road, and that's where it's so hard to judge that. That's why eliminating those small claims, no matter what kind of claim it is, anything under $2,500, in my opinion, I'm not putting it on my insurance ever, right? And that number will change, right, over time, but because it's going to affect you down the road. But again,
You just compared the insurance score to credit score. So insurance companies also look at your credit. They don't actually take a ding on your credit, but they're taking your credit into consideration. So your rates also reflect that as well.
Yeah.
Yeah, that all kind of goes in with your insurance. Your insurance score is it's not like it's a number we usually see. Some companies will show us your insurance score, but your insurance score is made up of a ton of different things. How long you've been with the company, your claims history, your credit history, if you're late on a payment.
And each company looks at all of these things differently. So, for example, Warren Insurance Company might take the credit score very heavily into consideration, or Mounts Insurance Company might take claims heavier into consideration. Is that true?
Yes, that's right. I mean,
It's accurate.
there's some companies. I actually saw an article the other day where it was like the best companies for different categories, right? And like for an example, like Nationwide, someone who has bad credit, Nationwide was the #1 insurance company in the in the country for people with not the best insurance score, not the best credit score. So
And that's another reason why the brokerage is so effective, because we have all these companies that have different niches and different markets and different clientele that they favor. And so when we have those options, I mean, and it's so funny too, because we'll have multiple quotes going, and one of them will be outrageous with this company, and then the next one, it's a very similar type of scenario, and they're flip-flopped, and there's just some differences in it could be credit score, it could be age of the drivers, it could be it just depends. So.
And that's the other beautiful thing about it, is that things change.
I was just going to say circumstances, life changes.
Like you could have somebody who doesn't have a claim for 10 years and they have 3 in 1 year or 1 month. Like I've seen that happen before. And it's like, gosh, dang, like what
And
the
that's
heck?
just luck at that point.
That is.
That's just
But to have, for us to first of all have the knowledge and know, okay, well, we know that this company tends to do best with multiple back-to-back claims in a given year, and these companies are out of the question. So now how can we like reorient or refabricate a good policy for this person's new set of circumstances?
Yeah.
So going back to us as the agent, because we're a broker, sure, and I feel like that's the shopping part. We're kind of doing the shopping for you, but we're also your agent, and we also communicate with you, educate you on your policy. What other pros are there that come with working with a brokerage?
Well, let's talk about the standard of coverage that we do here too.
Yes.
Because that's really important as well.
And I have a story time for this as well.
Okay, you want to go ahead and do it?
No, I want to explain the coverages first.
So we've had, and the reason this comes up is because we've had 2, like yesterday, literally, that they just didn't know what the numbers mean. So you guys see 100, 300, or 25, 50, or whatever, 300 combined. And we have a standard of coverage, and those are your liability limits and your property damage limits. Okay, and it's really important that you have a good amount of coverage that's going to protect you in today's world.
Correct.
All right. So, for example, if you have state minimum coverages, okay, that's what the state requires you to carry.
So for Missouri,
it's $25,000 individually. Okay, so $25,000 per person of liability, $50,000 per the accident, and $25,000 of property damage. An ambulance ride alone is going to run you $30K. Okay, right. I mean, right off the bat, if you're in a wreck, right?
I don't think it was that much.
That makes me so scared to take an ambulance ride.
I was thinking like 5 to 10.
No.
I was thinking 2.
Clearly, none of us have had an ambulance ride, so I don't
feel like
know.
Dusty has.
Okay, I have, and that was a big bill that I paid for a long time.
$25,000.
Okay, and it was around 20. Okay, but it wasn't that far. It was.
You taking a freaking luxury ambulance? I mean, and I'm not joking, or I am joking. Or I'm not joking because.
Okay.
It was a party
backtrack. Let's backtrack. I could be wrong on the numbers here. Okay. My point is the ambulance ride.
$150,000. Let's do a quick Google.
We're all sitting here thinking,
look,
Jesus, Caleb didn't take an ambulance ride a few weeks ago.
That is literally what I'm thinking. I'm like, thank God we took him. Jesus.
Look, it could also depend on what they got to do to you in the ambulance. Okay. I'm just telling you that I had an ambulance bill and it was a lot.
If somebody has to do a heart replacement in the ambulance, it's probably going to run you $20,000, right?
Oh, that's way more than that.
More than that. Okay.
Okay. My point is, from a medical standpoint, I mean, just thinking about the money. All right. Okay, stay in the hospital overnight. Why are you so funny?
That $25,000 medical or ambulance ride, man, just caught me off guard, man. I was thinking like $2,000. So
it's way more than 2.
I've always thought, like, if I get into a bad spot, I'll just call the ambulance. They'll come pick me up. Not for $25K.
Okay, this says, now, I don't know how reliable of a source this is, an ambulance ride can cost hundreds or thousands of dollars out of pocket, even with insurance. The average charge for an ambulance ride ballooned 22% to $1,200 between 2017 and 2020 before insurance or discounts.
Okay, so I may be way off. I may have 10x'd it.
Well, but
I'm just telling you that I have had one ambulance ride in my life,
Okay.
and I paid on that thing for over 5 years.
If anybody is watching and knows the cost of an ambulance ride, please comment.
Okay. The point of this is, okay, and medical bills are expensive.
Yes.
Okay, if you hit someone and it's your fault, and you only have state minimum coverage, you're setting yourself up potentially for a major financial disaster
Yes.
for yourself. Okay.
Yep.
So the standard of coverage that we write is 100, 300. That's our minimum that we want to write. Okay, so $100,000 of liability coverage per person that you could hurt, 300,000 total for the accident, and then 100,000 in property damage. So those are what you call split limits.
Right.
All right. The other option that we love is the combined, is so like 300,000 combined, because that's so much more flexible. Okay, if, you know, you can use that 300 no matter the situation, whether there's one person, two people, whatever it is. Okay, so anyway, I'm losing it on the ambulance part, but that's why it's really important, and a lot of people don't know what those numbers even mean, and you want to make sure that you're properly covered.
Yep.
And to add to that, like it doesn't even cost that much more money to be adequately protected like that. And we'll tell people, and there's no disrespect, it's nothing, like if someone wants state minimum, we will tell them, like, we're just not the office for you.
Yeah.
Right? This is not what we're doing. Like, we are professionals. We take value in what we do, and we want to make sure people are protected, especially from a liability standpoint. Because exactly what Dusty said. I know me and my wife have both been in different situations. I was 18, 19 when mine happened, and you were a little bit older than that, right? I mean, you were 24, 25. And, you know, there was times where if we had state minimum coverages, like, I mean, we would be paying that back to this day. Like, it can financially ruin somebody at an early age. People are like, well, I don't have enough money for him to even sue me for. Okay, that's great. But in Missouri, they'll garnish your wages for the next 10, 15 years.
they sure will.
A lot of people live paycheck to paycheck. So if you took a 25% hit, what's that going to do to you over the next X amount of years?
Right.
Right? To have an extra, you know, okay, that could have been eliminated by paying an extra $5 a month. Right? So I don't know. We just take a ton of pride on that.
Yeah. Our job is to educate why that's important, and we will break it down.
Yeah.
And we're also not selling anything or pitching anything that we don't believe in and have ourselves.
100%.
Yeah.
I mean,
I'm 100% overly insured. Because I'm a big believer that you don't want to be overinsured, you don't want to be underinsured either. But I am definitely over.
We have to take the pick.
We're probably overinsured. If someone tries to sue us, they're not getting anything from us out of our pocket personally. And if I die, then everybody, you know, you guys are millionaires. So
That was going to be my story time. So thank God I had the coverages that I had.
Yeah.
I rear-ended someone, and I'll put a photo up on the screen of the damage that I did to this person's vehicle. But he came back and sued me for $105,000, and he ended up getting away with $75,000. He earned $75,000 from the accident of this photo that I'm showing you. And all because he stopped working in the bedroom.
nope.
So
Still blows my
I'm just
mind.
telling you. And hey, listen, if you're hurt from an accident, get your money, honey. But there are also people out there that are going to take advantage of the situation.
It is a sue happy world we live in anymore, unfortunately. And that's why insurance is so high too.
Yeah.
It's because people take advantage of insurance companies. And it's just a big rolling, I mean, it's just an ongoing process, right? So
Yeah.
it sucks. I hate it. But it happens all the time. So you have people who drive around uninsured, and guess what? We're all paying for that, right? We're
Right.
paying for the people who don't have insurance. We're paying for, because guess what? When a company pays out $1 million, do you think that just goes on that one person's account? No, that's spread out all the way across the board, okay? And that's why, again, insurance is so high, and everybody complains about that, but it's like everybody's the problem too. I mean,
Right.
not everybody, I guess, but you know, a lot of the people. So
There are
that's
ways
no offense.
that,
I'm not saying it. I think you guys get my point. I think
Yeah.
I messed that up,
Yes.
But
and there are, in the 21st century, insurance companies are getting smarter about this and finding ways to implement telematics
Yep.
to better allow the customer to control their rates.
that's a great way to put it. Yeah.
I don't know that. I know that there's a lot of skepticism on being controlled by the government or being watched by the government.
Being tracked.
Or yes, being tracked. That's kind of the word I was looking for. But ultimately, what they're trying to do here is, hey, Susie Q, you're a distracted driver, 90% of the time, so your rates are going to reflect your distracted driving. Or Susie Q over here, she performs really, really well on the road. She drives a lot of miles. She's a very safe driver, so she's going to be rewarded with that with better rates. And so that's kind of a way for the client to take ownership, take control of their own rates, because on the flip side, we are kind of all being dinged in a way for the mishaps of others. But this is our opportunity to take control over our rates and to drive better.
So from taking the pool to making it more individual.
It's customizing your own rates. And honestly, I 100% believe that every company out there in the future will require that to be a thing. You will be required to have an app on your phone or have a device in your car, because that is a way to control your own rates. And that way it's not so you're not paying for everybody else's mistakes. So
we're all being tracked regardless of
if you got a cell phone,
your phone's on you.
Whether you've got a Traveler's app on your phone,
my phone always knows what I've been shopping for, even on different apps.
Well, even if we use our maps to like drive to, I don't know where this place is in Overland Park, map it out. You know what I mean?
No, I think that's good. So just be more open to the telematics whenever we bring it up. We do push it because it's easy to jump on board now, or you deal with it later.
5-10 years from now, you're having to do it anyway.
So get used to it. Make it a habit now. Help your rates now.
Oh, sure.
What else? I feel like, how long have we been on here?
So the next topic that we were going to cover is, we kind of already talked about it, just being 1 year old, celebrating that we're 1 year old. So, and then the last thing, and I know Amanda already mentioned it, adding more companies. We're constantly looking for more companies to add in our arsenal. So, even if if you came to our agency and we presented you with one best option, but communicated with you that we shopped through everybody, in 2, 3, 4 years, we're going to have that everybody, there's going to be more people that we're going to be
bigger.
We're just, we're so. Anyway, always bear that in mind.
And if you are curious about who we offer, who we're partnered with and stuff, it's on our website. You guys can get on there, kind of look. We have several A-rated companies, and then some for our more
A+.
A+.
We just landed a couple really good companies in this past week or two, and hopefully we'll get another one next week. And then by mid-October we'll have another one. So I'm very excited. About these new carriers we got. They told us no originally, and we've just stayed on them and gotten some contracts with them, and hopefully continue to grow our arsenal with it.
Some of those are for what, general contractors and stuff?
So that's what I was going to talk about real quick. So really what we're offering is your auto and home. Okay, that's a big part of what we do here. We do a ton of commercial. I would say, when it comes to commercial real estate, general contractors, anything from an electrician to an actual builder, framers, landscaping, anything you could think of, any kind of restaurants. Restaurants are a big deal, big thing of what we do here, or what we can do here. Garage keepers, we're starting to get into that market. Okay, so that'll be good. And then the other big thing that we do is we do a ton of transportation insurance. So we're licensed in 33 states. So Caleb, he's our trucking expert, trucking specialist. We actually put him through a really cool class this summer, and he's a nerd with it nowadays. So, but we're licensed in 33 states.
Something like that.
33 states. We have a little over 300 accounts on the books. So we're growing that, and we're having a lot more, companies that we're getting contracted with. That's probably the hardest part of anything we do is the trucking side. But we just landed a pretty big contract, I think, with a new carrier, and that we'll have access to middle of October, and that'll also actually free up some other stuff with the commercial real estate. But Oh yeah, very, very excited about everything we got
It's going
going
to be a
on.
game changer.
It really will be. So.
What do you mean by transportation?
So anything from, semis, box trucks, any kind of transportation insurance, any kind of delivery service. Dusty.
So
you could talk about
transporting
that.
goods,
Yeah,
not-
transporting goods, general freight, agriculture. What do you think?
Yeah,
Dustin?
so it's funny because you think semis, but if you've got a van and you're driving around Amazon stuff, if you've got a car and you're driving around Amazon stuff, you've got to have a commercial auto policy for that. So there's so much of that happening, obviously, in the world that we live in today.
Yeah.
Now
And
more
it's-
than ever.
And it's not just people. The people that we're insuring are not the ones that you see driving down the highway that work for a big semi truck company or a big trucking company. It's people that have their own small businesses, just like what we are. And so to be able to give them options and to have more available to us to help them grow their business, because people don't realize this, insurance for transportation companies is a massive expense.
That's their biggest expense, I would say.
Besides fuel, probably. Fuel and insurance are right there. And
You think they spend more on fuel?
maybe this summer.
This past summer.
Maybe over the
it
summer.
was a
You're
big
talking
deal.
about filling up and, thousands of dollars just to fill up, and that's not that's accurate. So
Yeah, no, I know. I'm trying to outweigh that. I agree.
I'm sure,
with that.
for insurance is probably the biggest one. And so, but basically anything. It doesn't even have to be the stuff that you own. Let's say you're just a farmer that's transporting your own stuff. Literally everything.
Yep.
Refrigerated goods is a huge thing as well.
Yeah.
All the stuff, all of our food, that comes to the grocery stores, that keeps things cold, all that. So, yeah, it's growing. It's not going anywhere, and for us to be able to provide options.
So this isn't like Uber transportation of goods to be sold.
That's actually a great question and a good point too.
Isn't that considered ride share if
Yes.
you use your vehicle?
That's where I was going.
Your personal auto, you can put a rider on it for ride share.
But yeah, the transportation's big, very complex. So we're learning on that, getting some good carriers to the arsenal. So it'll be good stuff. But yeah, that's a little bit of everything we're doing year in. Talk about rate increases. I think we're good.
Yeah, hopefully this was helpful. Even if you're another insurance agency, and hopefully you listened and learned something, or maybe can implement something that we're doing into your own agency and find it to be helpful for yourself or for your clients. We always want to help anybody in our industry, whether that be the client or another colleague of ours. So.
Yeah.
Yeah. So we have a QR code, and I'll throw it up on the screen here. All you do is scan the QR code. I'll also link, if you're watching this and you want to click on something rather than scan. It's called Canopy Connect. All you do is click the blue button, or black button, that says Import My Insurance, and then you'll find your carrier. So if you currently have State Farm, you'll click on State Farm, Geico, American Family, whoever you currently have. It'll ask you for your login and your password for your current insurance. You'll punch that in. It'll ask you for the date of birth, and driver's license number for all of the drivers. You'll punch those in. It will take you all of 120 seconds to get it done.
If you have the information,
it's super fast.
As far as date of birth and driver's license numbers, but
that'll be your most difficult task, is getting a hold of that stuff. But it's super duper easy, and then all of your information will be sent to our system, and then we can see your coverages, what you're currently paying, and of course all your vehicles, VIN numbers. It'll send us boats. We can see if you have a life insurance policy or not. We can't see any of the information on your life insurance policy, but makes it super duper easy. We'll quote everything out, give you a call, let you know what your rates are looking like, and
and as far as your login and your password for your current company, we don't get any of that information either. It's all secure.
Very secure, absolutely. So
cool.
You want to wrap up episode 10 for us?
Go Chiefs.
There we go.
Go Chiefs.
There's no other way to wrap
Go
it up.
Chiefs and get insured by Warren Amounts Agency.
That's right. Yeah, that's right.
Let's go. Peace out.
Bye.
If not, we're not friends.